The following program is furnished by K1 International LLC and is responsible for its content. Now, from the 5th floor Cumulus Studios in downtown Dallas, it's time for Inside Real Estate. Here's your host, Michael Kruizinga.
Good morning, Texas. How we doing out there? Welcome to your Sunday morning. You know, we talk all kinds of fun things here on this show. We do a little real estate, business, sports, entertainment, and all kinds of good stuff. And so we're looking forward to having a good show. We got an action-packed show for you today. We're going to be talking a little bit of mortgage and real estate with Terri Wagner over at Supreme Lending. We're going to talk about we actually got some great information for investors. So a lot of the smaller investors kind of get overlooked, and they kind of get tossed into that secondary lending market. So we've got some great information for the smaller investors out there. We're going to talk with her a little bit later. We're going to be talking with the folks over at Lone Star Transfer, talking about how to get out of your timeshare. Now, we've all had friends that we've heard this from, if not experienced it ourselves, where we've gotten into some really crazy situations with timeshares. And I didn't know that this was something that could happen. But you could actually burden your next of kin or your heirs with these timeshares. And we're going to talk about that and talk about some experiences that they've had with that, with the owners of Lone Star. Yeah, it's true. We're going to talk with the owners of Lone Star Transfer a little bit later in the show about that very story. And then, of course, we got Mr. Richard Tonica. We're going to talk some insurance today, taking care of all your needs out there over at Goosehead Insurance. And we're going to kind of treat today maybe as a little bit of a call-in, open call-in if you would like. So feel free to give us a shout if you want to talk really about anything and everything. If it's something related to what we do in our industries, feel free to throw that question at us. Or if you just want to talk about, sports, talk about Dak Prescott or Romo potentially coming back in a few weeks, or whether we should let him come back or not, or whatever you may want to talk about. 888-787-CLIFF, 888-787-KLIF. If you want to give us a shout, feel free to do so. Website, InsideRealEstateRadio.com, InsideRealEstateRadio.com. You can connect with myself and all of our partners. And remember, hey, I am a realtor, Mike the Realtor here, and I'm happy to help you with all your real estate needs. So if you're thinking about buying or selling or know anybody that's going to be buying or selling, I would certainly love the opportunity to earn that business from you or from them. A few great listings, by the way. We've got a great one down in Granbury, custom heated pool and spa and solarium, 1510 Joshua Way in Granbury, listed at $319,900, and it's only 2 years old, by the way. Lovely home. By the way, it's on the 11th tee of Harbor Lakes Golf Course. Nice thing about it is that it happens to be in Josiah Estates, so you don't have to pay the big-time Harbor Lakes community prices, because we take that same house, stick it over in the other neighborhood, and boom, that thing's $400, $420 easy where it is now, but still on the golf course, by the way. $319, great deal. So if you're thinking about Granbury or relocating within the Granbury area, you might want to catch me on that one. Got another one just nearby up the highway, 377 in Kruizinga. It's on 2.5 acres with over 150 oak trees, by the way. Beautiful custom pool, beautiful $100,000+ roof on that thing too. That one's running at $675. Beautiful one-story, by the way, which is kind of rare. And that one's really nice property up the way there in Crescent. And then, of course, we got our beauty down in Glen Rose, which is on over 18 acres, 5-acre pond, just south of 900. So got some nice listings out west side of town. And, of course, we've got some great office listings all over the Metroplex as well. So InsideRealEstateRadio.com for more information on all of that. What else we got going? Hey, every week I am reminded, by the way, that there are so many agents in the Dallas-Fort Worth area, and I expect this is really all over the nation, that, are just, I find there so many are very unprofessional. I just, it is what it is. And, to think that an agent might go and show a property and without approval. So many agents, they get so frantic about everything. They let their buyers kind of push them around, and The agents, the realtors are supposed to, control the situation, control the buyers, get excited. Let's go look at some houses, but at the end of the day, you got to have approval from the owner to get into that house.
Yeah, it usually helps.
That does help, hey, buyers
trespassing.
Exactly. Buyers get excited looking at houses, the agents get excited too. Cause we like looking at real estate, or otherwise we wouldn't be doing it, but you gotta, plan in advance, real estate agents out there. And generally that's good to do a day in advance, and, plan things out in advance. And if you've got a client that's, flying by the seat of their pants, you need to, slow their roll a little bit, get them, hey, look, explain to them, these are people's homes. They still live there. They have dogs, they have pets, they have cats, they have kids, they got all kinds of things. And, they want to sell their house. They want you to get in there and see it, but give them some reasonable amount of time to, plan. So that, to me, the professional lead time is the day before. Now that doesn't always happen, and we have clients that we're out rolling around with and like, hey, what about this house? They see something on their phone, or they just got an update from us, from our own automated system. They're like, hey, you just sent me an email. And I'm like, oh, I did. But
of course I did.
It was on my automated, system. And, and so if it's vacant, look, most of the time, 9.999 times out of 10, if the house is vacant, boom, we can get into it right away. No big deal. But when the houses are occupied, and most of them right now are, just because it's the way it is right now, and it takes a little time for them to, deal with their situation, especially if they have young kids and pets and whatnot. And so for an agent to expect an immediate response, from the showing systems or whoever it is that's managing the approvals, is not always realistic. And so if you don't get approval right away to go view that house, and you're trying to view it within the next hour, or you're sitting there in front of the house right now, and, oh, can I come in and see it? That's not all that professional. And you need to explain to your buyer clients that that's not either. If the house is vacant, no big deal. But if it's occupied, then, certainly you can try. And if it's, yeah, sure, come on in, no big deal. But if you don't get approval for it, you don't just show up and break into the house, because whether you have access to open that little box, which has the key in it, if you don't have prior approval, essentially you're breaking in and entering, Don't do that. And there, look, folks, there are agents out there that do that. There just are.
Well, that's part of what makes what you do impressive. And it's one of the things that I would talk about is when you're looking at a realtor, ask how much experience they have, just because the last thing I want to do is teach a realtor how to do their job. Yeah. And it's not my job. You're supposed to teach me how this process works. Right. You're supposed to guide me through it. And there is a reason that so few realtors renew their license when it comes up, is because they like you said, they're flying by the seat of their pants. They don't know what they're doing. The professionalism isn't there, and they're not, and that shows through with their clients, or the lack of clients. And so that's the reason that they switch from that to something else quickly.
Yeah, and it's unbelievable to me. And honestly, it doesn't matter what brand they're with, what company they're with. That really has no bearing on anything. No. People think, okay, well, Remax is a big brand, or Keller Williams is a big brand, or Century 21 is a big brand. And yes, absolutely, that's true, but it doesn't really have any impact on the agent. If they kind of knew how things ran in the backside, then they would maybe see a little bit better. But it really doesn't matter what brand they are with. At the end of the day, that doesn't really matter, because that's just simply, how many brokerages they have. It's a national brand that you may be recognized, whatever the case may be. But as you know, just like any McDonald's, good service at one, bad at another, franchisee type of thing. The agents, you'd be surprised. They really are letting the buyers run the show. And I think it's because, the agents don't want to, nobody wants to lead, anymore. I think that's a real issue. They want to be your friend, and look, I have the ability to, as a realtor, be your friend and really, truly be interested in what's going on in your life as a client. But I can also ask you the hard questions that help me get you from point A to point B and get you where you need to be. And I can also tell you that if I can't get you into a house in the next hour, then I just can't, because guess what? Somebody lives there. They have pets, dogs, they have children, and we can't get in there.
And it's part of the difference of being a professional and being an order taker.
Exactly.
Because anybody can take orders and do that, but it takes a real person and someone that knows the business to be a professional about it and be able to have that confidence to lead the people through it.
Yeah, and I think that is really something that is lacking, in the world today in general, and I'm happy to, take you to homes and we can talk about, what's best for you. And I can say, hey, this is a home that I would buy myself, or it's a home I wouldn't buy for myself. And here's why, but I'm going to approach everything in a logical manner, and we're going to do it in a professional manner. I'm never going to be running by, flying by the seat of my pants, with my clients. And, I think everybody would expect that out there as well. But I run into it, it seems like almost on a weekly basis. And I had that example this week that really kind of made me mad. And, another one, got an offer in that came in without a pre-approval letter, and it was ridiculous. The other thing is, inspections. I had this come up too. There's inspectors out there that are absolutely doomsdayers, that are going to tell you that, oh my God, this house is falling apart. Well, okay, they just did an inspection on a 40-year-old house. Well, 40-year-old house is, 40 years old.
Yes. It's got some character.
It's got some character. That's right. And it's got the same stuff that every 40-year-old house is going to have behind the scenes.
Well, that was like when we had an inspector come out to our house in August. He said one of the things that they wanted us to address was our attic was hot. And I looked at him. I was like, you got to be kidding. You do realize we're in Texas, and it's August.
Yeah.
And you're in my attic. Okay. You can put that on there if you want to. I don't care.
Yeah.
It's not going to be addressed.
Well, and it's, for first-time buyers, particularly buyers who aren't familiar with doing anything with their hands, and they're not familiar with how anything is really, really built. I mean, their own, perspective on everything is through their electronic devices. So we think we're talking about common sense, nuts and bolts mechanics here, which you should have learned in, 5th grade. And that common knowledge just isn't there. So then you get these inspectors that are doomsdayers, that the house is going to fall apart. Look, the inspector is supposed to pick that thing apart. That's their job. But, have a little bedside manner, and explain to the buyer, this is typical for a 40-year-old house. This is also typical for a 40-year-old house, et cetera, et cetera, et cetera, versus, okay, this thing's just going to fall apart. So you got a client that found their dream home, they put down their option money, then they paid the inspector, and they're out those funds, because you get an inspector that's a doomsdayer. It's unfortunate, but at the end of the day, it is the buyer's choice on who they pick for their inspector.
Absolutely.
And when they pick a bad one, hey, that's it's kind of on them. It's unfortunate, but that's why you need to listen to the recommendations of your realtor.
Well, that's
if you have a good one.
The inspector's always going to see it as a shack. The Central Appraisal District is always going to see it as a mansion. It's and somewhere in the middle, insurance is going to see it on the higher side of things. They're not going to see it at the shack that the inspector says it's going to be. They're going to think it's, oh no, this is definitely a $300,000 house. And when I'm talking to people, it's funny. It's just like your appraisal, your inspector, and your appraisal, your market price, and your dwelling price are hardly ever going to be the same.
Yeah.
But
it's
funny going through that process with people that have never gone through the process before.
Very important, folks, to pick the right realtor. Mike the Realtor right here for all your needs. Hey, folks, we're going to take a short break. Then we're going to come on back, and we're going to talk mortgage talk with Terri Wagner. Hey, see you in a few.
Hiring people is probably the worst part of my job. It's such a hassle, the searching, the sorting through resumes. Most people don't have the right experience.
We started using ZipRecruiter about 3 months ago. Right from the start, you could tell it was going to make hiring a lot easier. One click and my job was posted to 100+ job boards, all the top sites.
All of the candidates came to my dashboard, and it's easy to compare them. Thumbs up if I liked them, thumbs down if I didn't. No emails and attachments, printing up docs, phone calls, none of that.
And I couldn't believe the number of great applicants we got. I had the person we needed within 1 week. I don't know how we hired before ZipRecruiter.
Whether you're looking to fill one position or 20, find the best candidates with ZipRecruiter, where your job is just one click away from 100+ job sites. ZipRecruiter, the fastest way to hire. And right now you can try ZipRecruiter free. Just go to ZipRecruiter.com/talkradio. That's ZipRecruiter.com/talkradio. ZipRecruiter.com/talkradio.
With over 3.5 million square feet and 5 DFW locations, Ideal Floors has you covered for all your flooring needs. Whether you're looking for carpet, tile, laminate, wood, or vinyl plank, Ideal Floors has you covered. And with their price match guarantee and their 100% satisfaction guarantee, they are the absolute best in DFW for all your flooring needs. Call Kevin Hamus, the owner of Ideal Floors, at 214-789-0422 or go to idealfloors.com for all your flooring needs.
Now back to Inside Real Estate. Here's Mike the Realtor.
Hey, folks, we are back. It's Inside Real Estate with Mike Kruizinga. Website, InsideRealEstateRadio.com, InsideRealEstateRadio.com. Time to talk a little bit of finance and business and mortgage with Miss Terri Wagner over Supreme Lending, Rockwall. How's it going?
Good, Mike. How are you this morning?
I am awesome today.
Good.
Just awesome.
Good. Me too.
So let's talk a little mortgage and business. And, you know, we've always got all the best products and financing options and all the best interest rates with you guys.
Right.
So what's the latest scoop today?
Well, today I thought we would talk about something we haven't talked about before, and that is possibly some of our investors out there that have multiple financed properties.
Okay.
So for the longest, the maximum financed number of houses that you could have financed was 4. But there is now a product, it's been out a little bit, but there's now a product where you can finance up to 10 properties. That's not the number of homes that you own. You can own more than that.
Right.
But if you have an open mortgage, you can have up to 10, including the one that you know, your new one that you would be doing.
Right.
So I kind of wanted to just touch on that real quick, in case
Okay.
we have some investors out there that are listening to us.
Yeah, absolutely. That sounds good. And oftentimes this is great to talk about because so many times investors kind of get, you know, relegated to the secondary market, if you will.
Right.
The private market or the hard money market. And maybe they don't always get, you know, the best, you know, bang for their buck. And so now to maybe have a little bit of competition, maybe some other options for maybe that smaller investor.
Right.
You know, we're talking, you know, not talking about the big guys, but the smaller guys. And oftentimes they get so taken advantage of it, if you will.
Right.
You
They
know,
do with those hard money lenders because the interest rates are terribly expensive.
They are.
And then you have to refinance in a short amount of time. They're not going to finance your loan for very long at all.
Right. They're generally interest only, you know, and it's great if you need to get into a property.
Right.
You know, but getting out. So this is great. I'm excited to hear about this.
Right. So even if you have one of those products, we can use this product to refinance you.
Get you
into
out.
one of our products. Yeah. So maximum loan to value, you have to have 15% equity or down in the property to be able to utilize this product. And what I want to talk about is this particular product is for the 7th through the 10th home that you're purchasing. So if you already own 6 properties, you would be this product if you're purchasing another, going into the 7th. And the borrower eligibility, if it's multiple borrowers, they're going to count all of the open mortgages between both of the borrowers. So if one borrower has 3 and another borrower has 3 and they're buying another one together, even if they don't own those properties together, this one would be together, so it would be the 7th. Okay.
Got it.
So again, we have to have a 720 credit score and at least a 15% down or at least 15% equity if you're refinancing.
Okay.
And that's on your second home. And on your 1 to 4 unit properties, because we've talked about buying like duplexes and things. So if you're buying a 2 to 4 unit product, which is, again, a duplex, you have to have 25% down. So that's a 75% loan to value.
Okay.
But what I thought was really interesting is we can go up to a 55% debt to income ratio. And that's important on this product because the way your cash flow is doesn't always equal what it looks like on paper.
Right.
So when we determine what your qualifying income is or what your qualifying net rent cash flow is from your other properties, that may be less than what you're actually thinking that it is.
Mm-hmm.
So we can go up to a 55% debt to income ratio on this particular product, which I think is really important.
Yeah, it is, and that's very helpful.
Right. And so then we need reserves, obviously, with every product that you have like
Sure.
this, you're going to have reserves.
Mm-hmm.
So they're going to look, and it's going to be ran through the automated system. And the automated system is going to tell us how many your particular loan, how many months of reserves we're going to need. And reserves, by the way, if you don't know, reserves are money that you have in the bank or a 401k or any type of savings account, money market, anything like that, of your monthly mortgage payments. This home, as well as the other homes that you own, you need to have a certain number of months to cover those mortgage payments. That's a reserve. Okay. I don't think we've ever given the definition of that.
Yeah, we
kind
of assume people know that, so it's good to explain it to them.
Right.
Absolutely.
And so interested party contributions, seller paid closing costs. You can have those on this product, because it's an investment product, and a lot of investments you can't really have that. But because of the loan to value that we have with this product, you can. If it's a second home, if this is a second home for you, you can have up to 9% seller contribution. And if it's an investment property for you, you can have 2% contribution from the seller.
Okay.
Those contributions cannot go towards satisfying your reserves, though. Okay. So underwriting. Again, we talked about that this particular product is for the home number 7 through 10. This applies to the total number of properties that you have financed, not that you own. We can't have any bankruptcies or foreclosures in the last 7 years. No delinquencies, 30 days or greater, within the last 12 months on any mortgage debt at all. Out of all those mortgages that you have,
right.
You can't have any in the last year. No 30-day lates. Rental income, we're going to have to, because if you're purchasing house number 7, you have rentals.
Mm-hmm.
So you're going to have to support that rental income with 2 years tax returns, or for the length of time that you've owned the property if it was less than 2 years. So if you've only owned the property for a year, we're going to look at the last year's tax return and do the cash flow based on that.
Okay.
All right. Supreme Lending will only finance up to a maximum of 5 products and up to $2 million. So you can have other products, you just can't have all of them with Supreme Lending. Okay. So if you have other mortgages with other lenders, we can do up to 5 more through our company.
Okay.
Yes.
Very good.
Okay.
Well, definitely a great option, and like I said, the smaller investor often doesn't get the best deals.
Right.
Because they probably already have a home that they live in, and so that next one it's going to be more than likely that 20% down. Sometimes there's some other options, or maybe they go hard money, go private lender, go to that secondary market. But at least, you guys give some additional options for that smaller investor. So really folks, no matter where you are in that area, if you are already up into that 7th to 10th, or if you're somewhere south of there just looking for your first investment property, Supreme Lending's got a lot of great options for that smaller investor.
We do.
So highly recommend, giving Terri a call and to go over all of those options.
Right.
Because you're definitely going to be far better off with Terri than with either the big box lenders or who aren't going to really want to talk to you anyway.
Right.
What you want a second home, a second mortgage, an investment property? We don't really want to talk to you about that.
Because there's a lot of people out there, a lot of lenders out there that don't really know anything about doing an investment mortgage.
Right.
So you definitely, when you're calling and you're shopping, get a feel for who you're talking to.
Mm-hmm.
If they sound like they don't know what they're talking about when it comes to your investment purchase, then immediately disconnect from that conversation and give me a call. We've done lots of investment transactions through our office, and I kind of like them.
Yeah, and you got to remember, investments are investments, and they can, if you don't get with the right partners to finance your investments,
right,
things can go south for you really quickly.
Very fast.
I mean, how many times do I come across foreclosures where somebody tried to buy an investment property and they did an interest only, and then they weren't able to either do what they needed to do. Either they bought it for a flip and weren't able to flip it in time and get all the construction work done in time, or they bought it to rent it and weren't able to rent it in time, and they went with, some hard money, interest only, and then boom, they had to walk away from it and it became a foreclosure.
Right. Because a lot of people think that they can do that. They watch these TV programs
They sure
and
do.
they think, oh, if he can do it, I can do that.
Yeah.
And it's not as easy as they make it look on TV.
Yeah, you need to have your ducks in a row, and trust me, what looks like a good investment with the wrong financing options to finance that investment can go south real quick.
Yes, sir.
So highly recommend giving Terri a call over at Supreme Lending. Terri Wagner's her website, by the way, terriwagner.com.
Yes.
And all right, well, very good. That's some good info.
Thanks, Mike.
All right. Well, we'll see you next week.
Yes.
Hey, folks, Inside Real Estate, Mike Kruizinga, come on back in a few.
You might not know it, but fall is the perfect time to feed your lawn and kill those weeds that popped up over the summer. So this football season, you can spend halftime eating some lukewarm bean dip, or you can head outside and run some lawn feeding and weed killing routes using Scott's Turf Builder Bonus S Weed and Feed. The conditions are ideal for grass to grow deep roots and to kill dollarweed and clover. So forget the room temperature dip. Get out there and pick up your bag today. Fall time is yard time with Scott's.
Country Fest 2016, the Verizon Theater in Grand Prairie, December 9th, starring award-winning supergroup The Band Perry, with special guest Chase Rice, Michael Ray, and recent American Idol winner Trent Harmon. Tickets on sale now at AXS.com. The Band Perry, Chase Rice, Michael Ray, and Trent Harmon at Verizon Theater in Grand Prairie, December 9th. Country Fest 2016.
When it comes to your mortgage and refinance needs, trust Terri Wagner, our resident mortgage expert on Inside Real Estate Radio. With a wide range of financing options and competitive interest rates, you can trust Terri for a fast and reliable loan process with superior service. Go to terriwagner.com or 469-644-4818 today. Supreme Lending is an equal housing lender. NMLS ID number 207089, 6730 Horizon Road, Suite B, Heath, Texas, 75032. SML Mortgage Banker Registration, Residential Mortgage Loan Originator.
Now back to Inside Real Estate. Here's Mike the Realtor.
Hey, folks, we are back. It's Inside Real Estate with Mike Kruizinga. Website, InsideRealEstateRadio.com, InsideRealEstateRadio.com. Hey, we're going to talk timeshares right now. We've got Brian and Karen Holloway here, the owners of Lone Star Transfer. Their website, LoneStarTransfer.com, and they can take care of all of your needs for helping you get out of a timeshare. And today we're going to talk about contract assignments and the contracts that you sign with the timeshare companies, and in particular talk about how they transfer to your heirs, and really how you can be putting your heirs, your sons, your daughters, next of kin, in a really bad situation. And people do not think about this when they're signing into timeshares, and they don't think about this towards the end of their life, even though they may have enjoyed a timeshare for many years and maybe it worked out well for them. But coming towards the end of your life, it can be a real problem. I know you guys have some examples. So, for example, you guys will tell the stories about this, but let's say you had a timeshare, you've enjoyed it for many, many years, and but you're kind of coming towards the end of your life, but you haven't dealt with this timeshare. And since these contracts, by and large, in many cases, are perpetual, and they assign to your heirs, you pass away, and your estate can actually get held up if this does not get transferred to one of the heirs or next of kin. Isn't that right?
Yeah, in a lot of cases we've seen that, hearing from different people. And, these adult children now grew up with these timeshares when their parents bought them a long time ago. And so they grow up with these timeshares thinking that it's a great thing, and then all of a sudden, next thing you know, unfortunately, something happens to mom and dad, and they take these timeshares on for whatever reason it may be. Mm-hmm. And, and then they don't realize exactly what it was because mom and dad paid the bill all those years.
Right.
And so now they're stuck again with these maintenance fees and with no way out of them. They just didn't realize what they had.
Yeah, and they didn't realize what their parents, paid, and they just signed up for it. Maybe you're going through a traumatic time, settling an estate, with your folks, one or both of your folks, and you go ahead and sign it. And so, even if they enjoyed that timeshare for many years, and a lot of times people did, a lot of folks really enjoy their timeshares, and that's great for them. But when it's time to get out of it, that's when it becomes problematic. And to have an estate being held up in that case, folks, if you do have a timeshare and you're, starting to get into your later years in life, you need to think about, your sons and daughters and your next of kin and your estate, because that estate could be held up as far as being settled with one of these timeshares, because somebody's got to sign on to it. So it might be a good time if maybe you've used a timeshare and enjoyed it, but now you're not using it anymore. The kids are grown, and it's time to move on. Now is a good time to go ahead and get rid of it now before, moving in later into life. Isn't that right?
Yeah, that's true. And I think what a lot of our adult children really enjoyed growing up was we were paying for that vacation. It's a little bit different ball game when they have to pay for it. And so, they're finding there are different ways to travel. Years ago, when you wanted to go to a timeshare, it was very exclusive. Well, because of the internet and how everything has changed, pretty much our children know they can go online at any time and type in timeshare rentals. They can be at any one of these resorts with a snap of a finger, and it can even be less than what those maintenance fees are.
Yeah.
So that's the reality of what's going on right now, and I think our adult children would rather choose when they want to travel and pay less.
Yeah, absolutely. I mean, the cost of travel has gone down significantly. There's deals from a gazillion different websites. You can grab a package, and as long as you got a passport, you could be anywhere. You could take a last-minute deal, go internationally that weekend if you want to. So, the timeshares, you're right. There was this exclusivity, this certain cachet with it, for a time period. And maybe in some cases it still works for some people. But, when you're talking about a contract, you're talking about a product that is assigned on your death to next of kin, your heirs, your sons, your daughters. That's a pretty big deal. And if it can hold up settling your estate, people just aren't understanding that. And so maybe one of the heirs does take it on, but then they think, okay, well, I'll take it on. We'll settle the estate, but then we'll get out of it. Yeah, well, that's a process right there. And that's when they need to talk to you guys and let you guys get them out of it.
Yeah, that's correct. We've sat with a lot of adult children that have taken these timeshares on, and we're happy to get them out of the financial obligations of it and transfer their name off of it. And it's just a lot of different situations. Just like you said a while ago, there's all-inclusive deals now. You can fly out right here out of one of these airports and go down into Mexico or all over the United States and have everything paid in one lump sum and not have to worry about next year. If you feel like going next year, go. If not, that's okay too. You put that money back in your pocket and you're buying your kids Christmas presents for the next year.
Yeah, exactly. The cost of travel is so much different than then. And, having the flexibility to go wherever you want to when you don't really have that type of flexibility with the timeshares, But, look, if you've evaluated a timeshare and it's good for you, your family, that's great. I'm not here to disparage that by any means.
That's right.
There's just so many people that need your help, that want to get out of their timeshares, didn't know it was going to be so difficult to get out, didn't know there really was almost no exit possible at all, except for the fact that, you guys have figured out a way to help people do this. And it's not an easy process. You guys tell them the truth, but you help them and you get them out of it. And, folks, trust me, if you're already used a timeshare for many years and you're saying, okay, we're pretty much done with that. The kids are grown, we're not using it anymore. You don't want to get into that situation where that gets assigned to your son or daughter. You don't want to put them into that financial debt, because what those maintenance fees are every single year. You're going to be binding your kids' hands behind their back with this type of debt. And so you want to take care of that, well in advance. Go to LoneStarTransfer.com, get more information. You can talk to Brian and Karen Holloway, the owners, and they can help you avoid this situation where your estate could get held up in the future, and avoid a situation where your kids might, in a moment of weakness, take it on. Even take it on, maybe even, prior to, let's say you get sick, you get sick and the kids take it on, prior to maybe you're passing on. And it's unfortunate we have to talk about these things, but they're a fact of life, but it can be even worse. What can be worse than saddling your kids with your debt? You never want to do that. And so you guys help people take care of that. Folks, LoneStarTransfer.com is the website. Their number, 972-722-3166. 972-722-3166. They can help you with all of your exit strategy needs, because there's so many different timeshares, so many different types of contracts, but they're the experts on it. They will get you out of it. It won't be an easy process, but these guys are the real deal, and they'll help get you out of it. Folks, another great segment. Hey, we'll see you in a few.
If you have a timeshare, this time of year you're probably thinking about those maintenance fees coming due. Hi, I'm Karen Holloway, owner of Lone Star Transfer, located right here in the DFW area. Before you pay your maintenance fees, call us for a free consultation, 972-722-3166. We'll get you out of your timeshare and put a stop to those maintenance fees. Guaranteed. 972-722-3166 or LoneStarTransfer.com.
The Richard Tonica Insurance Agency in Arlington has nearly unlimited resources when it comes to getting you the best insurance rates and policies for home, auto, and more. As part of the Goosehead Insurance brand, you, the consumer, have the power of choice through the Richard Tonica Insurance Agency Network. Richard can quote over 20 A-rated companies to find the best fit for you, the best policy at the best price. Call Richard today at 817-286-2002. It's the Richard Tonica Goosehead Insurance Agency, 817-286-2002. Folks, it's Mike the Realtor here from Inside Real Estate, and if you're not listing your property with me, bottom line is you're leaving money on the table. There are over 15,000 agents here in the DFW area, most of whom are part-time and do a few deals a year. Do you want to trust them to sell your home? I think not. Call Mike the Realtor, the radio realty expert from Inside Real Estate on 570 AM KLIF. Promise you will get to me direct. Go to InsideRealEstateRadio.com. Don't sell your home with just anyone. Go to InsideRealEstateRadio.com and connect with Mike the Realtor.
Now back to Inside Real Estate. Here's Mike the Realtor.
Hey folks, we are back. InsideRealEstateRadio.com is the website. If you want to talk to us, 888-787-KLIF, 888-787-KLIF. If you've got questions about insurance in particular, because we're going to be doing a little insurance talk with Richard Tonica, give us a call. We'll be happy to set you straight. How we doing there, Mr. Richard?
We're doing well. Thank you for having me this morning. And before we get started, I'd like to welcome Julie Wells to the agency. She just joined as an agent within the Tonica agency, so we look forward to working with her and helping her customers, is just like we always have.
Well, very good. By the way, Richard T Agency is the website. RichardTAgency.com is the website. So what are we telling the folks today? We got to give them some good info again, as usual.
Well, I'm going to break off into a little bit of a tangent here and there along the way, because some things popped up this week, and I never get through my list, but we're going to talk about the things that you need to know about homeowners insurance.
Okay.
10 things that you should know or be aware of about homeowners insurance. First off, every one of us has to have homeowners insurance, or should have. And homeowners isn't just for homeowners. It's also for people that rent. If you're renting a home, or if you are living in any kind of structure, you need to have some kind of homeowners insurance. Why? Because where your home is where all your valuables are. It's taking you a lifetime to accumulate the things that you have. And whether it's the biggest investment of having a home, or it's all your earthly possessions in your apartment or condo or whatever it is, you want to make sure that you're protected. It's taking you a lifetime to accumulate this. You've worked very hard for it. Why let it go away because of an accident, a grease fire or electrical fire, anything else, and then you don't have anything. And not only do you not have a place to live, now you don't have anything to put in a place to live. And so your renter's insurance acts just kind of, well, your renter's insurance, let's say the house that you're renting burns down and you can't live there. Your renter's insurance is also going to provide money for someplace to live up to the policy limit for your particular policy, and to help you get back on your feet. And then it's going to replace all your property and everything else that you had in the apartment that burned down.
Right.
So just like a homeowner's insurance, if your home burned down and it's going to give you enough money to rebuild or find a new home, your renter's insurance acts the same way.
Sure.
So when you're looking at this, and this goes, and it's true for both homeowners and renters, you need to decide how much coverage do you need, because the amount that you're going to need, Mike, is going to be different from the amount that Sam needs and the amount that I need. And so I used to tell people that I set it up exactly the way I want it done for my family. Well, I've kind of changed that. I mean, I still have that same basic philosophy, but what I look at now is looking at your individual needs to make sure that I'm giving you what you want, not what I think you should want.
Right.
Because they may not always be the same thing. So going in and really doing a fair assessment of what do you need. Because when you're looking at a house, you know their budget, you know what their likes and dislikes are, you know exactly what schools they want to be in, or what area of town, or you know all those specifics on finding the perfect house for someone. Well, I need to know that same kind of information for their insurance, so that when we're getting a policy together and we're looking at the different carriers, that I'm putting them with the carrier and the policy that is right for them. And when we're doing that, we're going to not only just look at your coverages, but we're also going to look at your deductibles, because it depends on how much. I mean, we all have a budget that we need to stay in, and within that budget, changing your deductible, yes, I always want a 1%. I always want it as low as I can. Have I ever put in a claim? In my life, I think I've done one claim on my house and maybe one or two on my auto. That's all I've ever done. But I still, when I do put in a claim, I don't want to have to come out of pocket very much, if anything at all. Mm-hmm. And so looking at the deductibles, what can you afford? What do you want to afford? Does it make sense that if you don't put claims in very much, that you move it up to a 2%? You can do that. If you're doing quite a few claims, well, you're going to have a higher premium, first of all. But I mean, keep your premium as low as you can. That way, when you're putting in the next claim, that it's going to be lower for you. And mm-hmm. So looking at that stuff is, and whether you there are different carriers that offer different kinds of deductibles. You can have a set deductible amount of $1,000, $2,500, $5,000, or you can do the percentage of your dwelling. And when we're talking about deductibles, your deductibles are always, when you're talking about the percentages, it's always based off the dwelling. So the higher your dwelling, the higher you're going to come out of pocket. So it's also important to look at that and make sure that we're keeping your dwelling value at the right amount, making sure that everything that is in the house is accurate, what we're saying it is in the house is accurate, but keeping that number as low and accurate as we can keep it. That way, when you do have a claim, you're coming out with as little amount as possible out of pocket.
Right.
One of the things that I was talking to I had a few events that this last week where I was out and about, shaking hands and just meeting the general public. And I want to say 80% of the people that I talked to had no idea what kind of home policy they have. And which is scary, because this is the absolute most, it's your biggest investment.
Yeah.
And you don't even know how you're protecting it. And so I was just sitting there and it's like, So you have no idea how much. I mean, you have no idea what kind of policy you have, and they're like, "No, I just know that I looked at the price of the policy." I'm just like, this is one of those things that
all policies not created equal.
Absolutely not. And we've had that discussion. We'll come around back to it. But I mean, it really isn't. I mean, you've got a myriad of different home policies that you can have out there. And some of the biggest things are replacement cost versus actual cash value. If you see actual cash value on a home policy, just throw it away. Call someone that actually cares about it. Call me, because it's one of those things that you absolutely do not want to file a claim with an actual cash value. And to make it simple, an actual cash value, let's say you had a roof. And this last year you had a storm, March 17th. I know that because I had a lot of customers that had that that storm hit them that day, and we've replaced a lot of roofs this year. March 17th comes, you need a new roof. It's $10,000. Actual cash value, let's say your home is 15 years old. So your roof is 15 years old. Out of that $10,000, they're automatically going to take $5,000 away. So you would normally have a $10,000 claim. Now it's already down to $5,000. After that $5,000, now let's say you have $150,000 for your homeowners policy. So now you take another $1,500 because that's your deductible. Let's just be kind and say that you've got a 1% deductible. Now that $10,000 claim that they should have been paying $8,500, now they're only paying $3,500. So you're coming out of pocket the rest of the $6,500, and it's absolutely not in your best interest. How many years did you save $100 or $200 on your homeowner's insurance policy? Probably not enough to make up for $6,500.
Right.
And so looking at that, I mean, if it's a risk that you're willing to take, let's understand. That's fine.
As long as you understand, that it is a risk, but so many people don't even know. They don't know until they get hit, and then it's too late.
And that's what I tell people. And that's kind of where I was going with. That's the reason that I stopped setting it up the way I wanted it done for my family, because your risk tolerance is different from mine. And so if that's a risk that you're comfortable with, that's fantastic. We've got a product for you. There are products that are actual cash value for a reason, because people are willing to take that risk. I personally am not, but I mean, there are a ton of people that are willing to do that. And a lot of them are investors. Let's say that they didn't spend very much on the house. They're going to keep it for 4 or 5 years, and now they're going to turn it around and sell it again. They're willing to take that risk, and if you are, that's fine.
Yeah,
it's. I'm not saying anything bad about them. I'm just saying, just know what you're getting into before you just look at a price and say, "Oh yes, I'm covered." Well, maybe not.
Yeah, I mean, you've satisfied. Okay, if you got a mortgage on your house, you've satisfied the lender. You've got some coverage, but yeah, you want to be taken care of, and that's what we're trying to get across is. If you have no idea what's going on with your insurance policy, and it is your largest asset, as you say, just call and talk to Richard. Spend a few minutes on the phone, and guess what? He's going to tell you. He's going to go through your policy, and then he's going to let you know, hey, man, you're in a dangerous spot here, and here's what's going on. And then if you choose to stay where you are, great.
Fantastic.
But he's got some other options for you that are going to have you more covered, more taken care of. Hey, do you not want to take care of yourself and your possessions and your family? Yes, you do. So do the right thing. Talk to Richard about it. Hey, you're going to look like the stud, that we know you are, or the studette that we know you are, by talking to Richard. And then more than likely, you're probably going to save some money too.
Yes, get a better policy and save money. Yeah. And who doesn't want that?
And it's so important, and people don't think about it, but it really is. Well, we've kind of ran this one to the end of the line here. Let's take a short break, folks, and then we're going to come on back. See you in a few. Folks, it's Mike Kruizinga here with Inside Real Estate Sports Entertainment on 570 AM KLIF. Did you know that virtually all of us will experience a fall in the bathtub at some point in our life? Well, statistically, it's true, and as we get older, a fall in the bathtub can spell disaster, as we just can't recover the same as we did in our younger years. Don't let something as silly and preventable as a bathtub fall put an end to all your special plans you have lined up for your golden years. Invest in a Hydrojet walk-in bathtub. Made in the USA and with the lowest step in the industry, Hydrojet walk-in tubs has your best interest at heart. With no commission sales staff or huge warehouse overhead, they build and sell direct to you, saving you thousands of dollars over their competitors. Call Randy, my friend and owner of Hydrojet Walk-In Tubs at 855-980-8827 or go to hydrojetwalkintubs.com. You'll be able to speak with Randy directly, and make sure to mention you heard about it on the radio. And for you veterans out there, there's a grant available for you to cover the majority of the cost of a walk-in tub, making it darn near free. Call Randy at 855-980-8827 or go to hydrojetwalkintubs.com today.
Living in the DFW area, expansive clay soil and extreme weather conditions play havoc on homes' foundation. But thankfully, you can turn to Permapeer Foundation Repair of Texas, who has successfully repaired over 20,000 properties and counting in the DFW area. With the most trusted, tried and true foundation repair methods, trust the professional staff of Permapeer Foundation Repair to take care of your property, and most repairs are backed by a lifetime transferable warranty. Mention Inside Real Estate Radio when calling Permapeer at 214-637-1444 or when booking online at permapeer.com for your Inside Real Estate Radio discount.
Now back to Inside Real Estate. Here's Mike the Realtor.
Hey folks, we're back. Inside Real Estate. InsideRealEstateRadio.com is the website. We were talking to Mr. Richard Tonica over at the Goosehead Insurance Agency right here in the DFW Metroplex, in the heart of it in Arlington. RichardTAgency.com. RichardTAgency.com. Connect with him. He's going to get you squared away, taken care of. I wholeheartedly believe it. He's done it for so many people. He'll do it for you. Let's see what else we got going on. We got a short little amount of time here. We got about 5 minutes or so.
So make a prediction on the game today.
Yeah, it's the Packers again.
You know, it's funny that Cowboy fans have this heated rivalry with the Packers. And I can understand it from the 60s and the 70s. But our generation, I mean, we owned them every time that we played them.
Yeah.
I don't know why we hated them. I'd love to see them every week back in the 90s because we beat them every time.
Yeah, I guess it's, just because of, a few years ago with the Dez catch.
It was a catch.
I know. And so we're still going with that. But, yeah, Dak looks good. I mean, I feel pretty good about it. I think let's see. We're playing on the road too? We're playing Lambeau, right?
Yep.
Okay. So we got
or lukewarm tundra.
Yeah, we have a better shot at winning on the road than we do at home. So I'll give that up to us. But I don't know. We'll see. I'll just say it's a close one. We'll go with that. At least as a Packer fan. So I gotta play the in between on this game. So.
Well, I used to be a Miami fan until they drafted Tannehill, and then I was like, seriously? Okay, now I'm going to have to root for the Cowboys now.
Hey, have you watched this Designated Survivor show with Kiefer Sutherland, the new show that came out on ABC?
No, I thought it was going to be like 24.
Yeah, isn't it 24 sequel?
That's what I thought. And, for the folks that haven't seen it, and if you're expecting Jack Bauer or super Jack Bauer-esque action, you will be definitely disappointed. I mean, first of all, I was wondering, okay, why is Kiefer doing a show on ABC? Because we all know what the fluff on ABC, it's just all fluff is what ABC does. So they kind of took a really great premise with this show. Like, wow, this could be exciting. It really could. And then they kind of ABC'd it down to like, an ABC's, kids special. And there's some flashes of greatness, but it really, so much of it has been about, him, talking to his family and really that's it, but they got.
So Jack Bauer paperwork.
Yeah. Yeah. I mean, it could be an amazing show. There's some flashes of greatness in it, but it's just so slowed down and like, kind of like Desperate Housewives-y.
So this is the other 364 days for Jack Bauer.
Absolutely. Absolutely. You know, it's got what's her name from La Femme Nikita in it. She's in there. She's one of the FBI agents. She's a great actress. Got some great actors in it, but you know what? It's brutal. It's disappointing. I'm giving it a few more episodes, you know, another shot, but I don't know. We'll see.
No, we really don't watch a lot of TV. We'll watch a lot of movies, but not a lot of TV. Because we haven't seen anything come out that really interests us anymore.
Well, all the good stuff is on cable anyway. FX has got so many great shows. I just finished up third season of Tyrant, which was amazing.
Oh, really?
Yeah, and then I'm I'm caught up on The Strain, which is on FX as well,
right? Which
is in season 3, and that's actually gotten.
Have you seen Mr. Robot?
Pretty good. No.
Oh, that is fantastic.
It is a fantastic series.
Yeah.
It's about a hacker trying to take down the system.
Okay.
It's really good.
Interesting.
But now that's off, have you seen Westworld?
No, not yet.
We had the free HBO, what was it, last weekend or the weekend before? And so that came out, and I was just like, oh, that looks interesting.
Well, I just thought I'd throw that out there. Hey, a couple headlines for you real quick, folks. We got a few more minutes. Hey, Muhammad Ali's home in Louisville hits the market. It's $2.2 million. So if you want Muhammad Ali's home, and I think this is actually a pretty good deal, $2.2 million will get it to you unless there ends up being a bidding war at the end of the line. 9,300 square foot home built in 2001 on about 2 acres. It's got a basketball court. Of course, it's got a nice pool and a gym, wet bar, all that good stuff. $2.2 million. That's actually a really good deal. Muhammad Ali's home.
Why would it have a wet bar?
Why wouldn't it?
Yeah, why not?
Why
wasn't
not?
he Muslim?
Yeah, they can still drink.
That's for his guess.
Oh, really?
It's not fermented grape.
Oh, okay.
Yeah.
I didn't know.
That's a good deal. Hey, you know that
I'm wrong.
One of the homes, there were several homes used here in Dallas to film the Dallas show back in the 80s. One of which was a Preston Hollow estate over at 4800 Park Lane. It is on the market for much more than Muhammad Ali's place, $12.95 million.
Oh my goodness!
Reduced from 14.5. So if you're looking over in Preston Hollow area, and you want a home that was used in the Dallas show, the famous Dallas show, there were several properties. There was the old Box Ranch back in Frisco before it burned down, was used in the show, and also South Fork Ranch. But there you go. That one's available. Hey, folks, we are out of time. See you next week, every Sunday, 8 to 9 a.m. See you next 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 8 to 9 a.m.